Hello, everybody. This is Humberto Parra from Group 16. I did this investigation along with my teammate Rachel Kuta. We identified two companies in the broadcast, radio, and television sector to consider for potential investment. One of them was SiriusXM Holdings, which is a subscription-based radio company broadcasting in the United States and Canada. This company was selected for consideration due to its brand recognition, dividend payment stock, and the company growth. The other one was Nexstar Media Group Inc. It's a television and digital broadcasting company. Nexstar provides television programs and services in a total of 11 states, with a coverage of 68% of the U.S. television household. This company was selected for consideration due to its strong financial position and steady asset growth. Over 90% of the company's stock is held by institutions, and individual shareholders have little influence over the board. Both companies have increased their total debt. SiriusXM has increased its total debt by over 34% from 6.8 in 2018 to 9.2 billion at the end of 2021. In the most recent SEC file, Sirius specifically calls out this debt balance as a risk as related to its capital and ownership structure. This heavily debt balance has resulted in a current stockholders deficit of 2.6 billion. A negative shareholders equity signals inadequate cash and other asset balances to cover the company debt obligation and a risk of insolvency. On a positive note, the company has increased its cash holding from 54 million to 191 billion during the same period. Sirius has a strong revenue growth at the end of 2021, and bet analysis estimate per share earnings in the last 3 quarters. Continuous subscription growth and advertisement demand had shown Sirius as a serious contender in the broadcasting market, even against Apple and Spotify. Nexstar, like Sirius, has dramatically increased its total debt in the last several years. Between 2018 and 2021, debt increased from 3.9 billion to over 7.5 billion. Nexstar more recent annual filing reports of 1 billion in revenues from operation and investment was used to reduce debt, and 282 million was utilized to repurchase shares. The significant payout shows management focus on growing share value and potential higher per dividend payments in the future. Both Nexstar Media Inc. and SiriusXM Holdings Inc. have utilized long-term debt and equity financing. With the broadcasting, radio, and television industry, the debt-to-equity ratio is 0.88, which indicates a moderate use of debt and preference towards equity. Comparably, Nexstar has a current debt-to-equity ratio of 2.6 and Sirius is negative 3.5. Sirius has a negative equity balance due to his high debt and negative retained earnings. Although its cash balance has grown significantly in the last 5 years, it has had not enough power to cover the difference between its assets and liabilities. This is a highly risky financial position if revenues cannot cover the cash needs for debt financing. Nexstar and Sirius have both borrowed heavily in the last 5 years. Nexstar completed a major in 2019 with Tribune Media, and I'm pretty sure that many of you heard about SiriusXM purchasing Pandora in 2019. Both of these events substantially added to their respective company debt balance. Nexstar and Sirius have both utilized a stock buyback plan in the past few years. Very low interest rates and ability to use the stock for option exercise and vesting of restricted stock has made this a compelling decision. Nexstar and Sirius are both paying quarterly dividends. Nexstar is paying 90 cents per share, and Sirius is paying 9 cents per share. In addition to this quarterly dividend, Sirius recently announced a special dividend payout of 27 cents per share in the month of February due to a strong fourth quarter in 2021. Their dividend has increased 3 times over the last 5 years, and Sirius has been able to generate a larger amount of cash, which has helped the company to increase its dividend payment. While the cash payment to stockholders are a strong signal to the board optimism of future growth, it leaves little cash reserves within the company. Now, in our final assignment, we had to do a company valuation between SiriusXM and Nexstar. We used 3 different ratios. One of them was P/E ratio, PAENG ratio, and the dividend discount model. For the profit and earning ratios for SiriusXM is of 19.46, while for Nexstar Media the ratio is of 9.5, which makes Nexstar a better option since it's almost $10 less. The PE for the profit and earnings ratio for Nexstar Media compared to the broadcast and television industry is also less. For the broadcast and television industry, the PE ratio is 14.53, which makes us see that Nexstar is a better option compared to other stocks in their industry. For the PG ratio for SiriusXM is of 1.94, which is higher than the ratio for Nexstar Media of 0.95. The PNG ratio for this industry is of 132. Once again, Nexstar shows to be a better option over SiriusXM. For the dividend discount model for SiriusXM is of negative 37%, which is also higher than the one for Nexstar Media of negative 54.8%, which considering all this option, we can see that Nexstar Media is a better option than SiriusXM. At the beginning of our assignment, we had the belief that both companies were a good option for long-term investments. However, after the weeks passed by, we find out that Nexstar overperformed SiriusXM in every single option that we had, in every single ratio, and also in their decisions that they have. Also, the high leverage and higher stock dividend will make Nexstar a better option. Although we see that the SiriusXM could be a good option in the future if it continues with the revenue growth. Thank you for your attention.